Well, I think the Sustainable Development Goals provide a very good opportunity for different players in the market for more responsible investment and for more impact. So looking at the market, it really makes sense for different players, for beneficiaries, for asset owners, for investment managers, for financial intermediaries, and also for investee companies to align their performance with the Sustainable Development Goals. So for the next step, I think it would be really good to have much more collaboration between parties in the market, parties in the investment chain for Sustainable Development Goals impact. Well, I think Sustainable Development Goal 13, climate change, makes sense for investors from three different perspectives. One is risk, two is opportunity, and three is fiduciary duty. So to start with risk, we've seen less risk for investments that take climate into consideration, so really a lower risk profile. Secondly, the opportunity. To really have a future-focused lens is really good for your investments. I think climate is a very good sustainable development goal because it's readily quantifiable for investors. And three is, I think, climate change investments are aligned with fiduciary duty to really meet the needs of beneficiaries and meet the needs of future generations. I think the future of that is really integration of environment, social and governance criteria into your mainstream investment decisions rather than focusing specifically on impact. So historically we've seen responsible investment grow throughout all asset classes and impact has been reasonably niche market. So going forward I would suggest that investors really incorporate environment, social and governance criteria into all their investment decisions across the board in their portfolio to make a positive impact going forward.